Welcome, everybody, to Paving the Way Forward. It's an amazing series brought to you by Wells Fargo and the National Foundation of Credit Counseling. I'm so pleased and honored to be your host. I'm Asia Chandler with Urban One, and joining me today are some super incredibly dope people. Rulon Washington, the Executive Director of Wells Fargo, is with us, along with Martin Sanchez. He's the Executive Director of Wells Fargo. We have Herman Palmer. He's the Senior Vice President of Outreach and Inclusion for the National Foundation of Credit Counseling. And we have Barry Coleman, the Vice President, Program Management and Education. So welcome, everybody. How you doing?
Hey.
Doing great. Glad to be here.
Yeah, we're super excited because, buying a home is probably the largest investment we'll ever make, right, in our lives. And so we need to kind of inform people, let people know about credit counseling, about how to even purchase a home, the things that, could possibly happen in the process, and just kind of like get people excited too, because home ownership is an exciting process, right?
Yep, that's right. That's right.
Absolutely. So we're going to talk about, topics on credit, home budgeting, selecting a property, financing it, and all those types of things. And so I'm super excited to have everybody here today. Let's talk about the holidays, right? They're like around the corner, even though it's 80 degrees. I don't know where you are in the world, but in the DMV area, it's 80 degrees in November. But the holidays are quickly approaching. And with that said, people tend to buy. We shop. We want to max out those credit cards. We want to buy our significant others those amazing Christmas presents. But that's a problem when you're buying a house, right, Herman?
Absolutely. So what happens is a lot of people, when it comes to Christmas was my favorite holiday.
Yes.
Why? Absolutely. Because a brother was about to get paid. I mean, when I was little, brother was good. Oh, I was so good. Yeah. I'm talking good deeds, check marks in class. On a report card, there were stars when it came to behavior. I was a poster child for being good.
Right.
But here's the thing. When I grew up, I realized Christmas has a price tag attached to it. Right. I mean, when you look at the whole gift-giving equation, it's great when you're the recipient. But when you're the giver, you got to pay for that.
Right.
So for a lot of us, we equate price, size, and extravagance with an expression of our love.
Right.
And the more expensive we think the gift, the more we're able to demonstrate just how much we love the recipient. Don't fall into that trap, please. Okay. Don't fall into that trap. It's about thoughtfulness. You know how they always say it's the thought that counts?
Yes.
Think about the person. Think about the gift. Yeah, I could go out and buy a designer bag at say $600, but get it on sale for $475. Ooh, look at me. But pay for it on my credit card. And then when that bill comes, guess what? I'm like, I'm not going to pay off the whole thing this time. 1 month goes by, 2 months go by, 5 months, 9 months. So now all of a sudden I do wind up paying it off, but that $600 bag that I thought I was getting for $475 because of interest expense, I wind up paying $615.
Right.
So think about that. You want to make sure that you don't overextend yourself for the holidays. Be creative. Buy photos, put them in thoughtful frames, and create memories through interactions and events. Don't just go through material things.
I love that.
Like that.
But a lot of us, those are our love languages, right? Like gifts. My love language is accepting gifts. So I don't want macaroni cards for Christmas. So there got to be some alternatives, right? On how you purchase those gifts. And, how can our viewers kind of prepare for the holidays so that they can actually get those gifts that they really, really want?
So what they can do is make a list of who you're planning to give. And once you make that list, don't add to it. Don't say, oh, I forgot so-and-so. Oh, I forgot. Your list may start off with 10 and you keep forgetting and remembering it winds up being 25. Right. Not to forget the fact that if you see something really cool, I'm gonna get it for them. But I think I want that for myself too. So now you're getting tools and stuff. The other thing is, where possible, don't buy your gifts. Either make it and create a wonderful memory, and create the memory by how you give it to them. Take them out for a date. Take them out for an event, and then show them. Take them out for the experience. Take pictures of the experience so that they always have a memento of the experience.
Right. Well, the holidays they come at us hard. Like the marketing is like almost an assault. Like we are victims of these ads, and it's just like, ooh, the glamour, the sparkle, the thrill. Like things make our eyes happy. You know what I mean? Like, ooh. And like you said, it's like one for me, one for you. Two for me, one for you.
Okay.
Yep.
So
Yep.
I bought 25 gifts, but I got 50 for myself. So how can we kind of like, the traps, if you will? How do we avoid those marketing assaults?
Let's see. Create a budget.
Yeah. Oh, good.
Have a plan. Create
Yes.
a budget and stick to it.
Right.
If you use your credit cards, make sure you pay that off in the next statement. Don't finance it over a number of periods.
Right.
Those two things will go a long way into helping you stay away or manage the shiny thing experience.
I love that. That's a good idea. Very good idea. Barry, what are some of the tricks of the trade that consumers can now like prepare themselves for the shopping center in your eyes? Tell us from your perspective.
Yeah, absolutely. And I think Herman touched on this just briefly also. First and foremost, you want to start by determining what your holiday budget is. And yes, everyone should develop a holiday budget. No question about it.
Right.
That way you'll know exactly what you have available to spend and will be less likely to then overspend because you're going outside the parameters of that budget that you created.
That's an amazing idea.
Yeah. I mean, it's so fundamentally important that people do this. I think oftentimes what gets folks into trouble is that they just start shopping and they haven't set a budget, they haven't created a list, they just go out and start shopping. And to Herman's point, and I've been guilty of this myself.
I'm definitely guilty.
When you go out there and you're shopping and you see things that that would look good on me too, and you start buying things for yourself. Yep. You can really get into trouble then because you're not sticking to the plan. You got to stick to the plan.
I think I get in the most trouble on Black Friday. I try to work on Black Friday.
Yeah.
Because y'all remember those Kmart blue specials? You'd be like, right now, $10. I'm like, let me get 10. You find yourself in a lot of trouble. And I've never created a budget before. So I was today's years old when that idea said, hey, let me try that this year. I think that's really, really smart. Because again, the marketing comes at you, it's like an attack force, right?
Yeah. Well, think about it. Marketing is backed by analysis, data that speaks to psychology, your behavior, even what's going on in the marketplace and what your need state is. And so people need to feel good. How do they feel good? By giving something and seeing that warm embrace and having people say, oh, thank you so much, and getting those warm hugs. That's marketing.
That is. It's true.
Yeah.
Rulon, like what are some of the holiday actions that could jeopardize prospective homeowners, like have the ability to even qualify for a mortgage?
See, I was going to chime in right there because Herman, the marketing is so enticing. Right? It seems. Are you speaking directly to me? How did you know I want that new car? How did you know? Right? And so when you think about from a consumer's perspective, I mean, it feels so good to give and it feels so good to receive. But if you have a plan in place and you want that house and you're thinking about where you should live and you're saving up, the two things I would say that are top of the list in jeopardizing your ability to actually get into that house is overspending,
right?
And then mismanaging your credit, right? When you think about overspending, it's essentially, all right, I got a budget for Christmas. I don't even know if that's a real thing, a budget for Christmas, right? We can set aside some money, some cash. Hey, you know what? I'm gonna, and I've tried that in the past. I've tried to set aside, let's just say $1,000 and say, you know what? I'm gonna buy my wife this, my daughter this, and then the list of people that you have to spend on extends, right? Like, oh, I gotta get my aunt something, and right now that $1,000 is $2,000, and then you're wondering, when it's time to dig into your savings to get that home that you've been looking and dreaming about. Even though it's not going to be during the holiday season, it might be March. Right. You can think back and say, you know what? I spent $3,000 during Christmas. I really only set a budget for $1,000. I spent $2,000. That could be something I can utilize in order for me to get into homeownership. I also mentioned mismanaging your credit. So from a lender's perspective, when you sit and talk to a loan officer about the potential of getting into a mortgage,
Mm-hmm.
some of the things that they look at is your ability to repay that debt, right?
Yeah.
So they're going to look at your credit and they're going to say, how often is this person repaying that debt?
Right.
Now, you may have done great from January all the way to October, but when November comes and those advertisements come out, and then Black Friday, right?
Right.
You work so hard to get that credit to where it needs to be. And now you are mismanaging that credit card because you don't want to dig into your savings, but now you're putting that new toaster oven, that new microwave,
Yes.
right? Those earrings for your wife, those golf clubs for your husband, right? And now when
the iPhone 25,
exactly, iPhone, whatever number. But then when January comes, right? It's like, all right, wow, I did a great job of saving. Because see, I still have my savings ready, but then you look at that credit score, and that credit score dropped a little bit. Because one of the biggest things is utilization.
Right.
So as a mortgage lender, we want to see, over the last 2 years, how do you manage your credit?
Right.
And what will happen is once you compound all of the spending on your credit card, and to Herman's point, if you're not paying that off during your statement, that utilization can impact your credit score. Now your credit score is going down. Now you have to try to do everything to get back into a space where you actually can get the best product or program from your mortgage company. So overspending and mismanaging credit, I say, were two things that can jeopardize your ability to get into homeownership.
And I'm actually glad you said that, because so many people don't understand that credit is just that. That's actually the definition of credit, is the ability to repay.
That's right.
Debt. Like, so many people feel like, I have a credit card with a zero balance, and they're like, why is my credit -4? Well, you haven't used it to show that you have the ability to repay the debt. So many people don't kind of understand that.
That's
so
right.
it's usually like one extreme to the next, right? Either they don't use it because they're scared, or they max it out at 125%.
That's right.
How do we get them to stay like within their means?
Yeah. And well, so I am someone, I'm guilty of that. Of saying, you know what, if I just put it on my credit card, it'll be okay. Because I got my savings over here. You have to get out of the behavior. That's one of the reasons why, at Wells Fargo, we partner with HUD certified housing counseling organizations like the National Foundation for Credit Counseling. Is as a mortgage company, we're not in the business of going through each line item in your budget, right?
Okay.
Our goal is to lend you products and find the best solution for your financial needs. But you get a financial coach, a free financial coach, I might add, for the National Foundation for Credit Counseling. They're going line by line. They're looking at how much you're spending. They're looking at your behavior. Right. And they're also looking at your credit and saying, hey, if we can get this off of your credit, your score is going to go up 10 points. As a lender, we're looking at that and saying, wow, this person's doing a great job of managing their credit. I know in the next 30 years, as they're paying off this mortgage, that they're going to be able to make on-time payments. So my appetite to lend is higher because I know that the behavior shows that you're going to pay that loan back. And so you put yourself in a good scenario with your banking partners when you do have the budgeting and the credit and all of that stuff in line.
Okay, so there's like a formula
one
to
thing
it.
One thing I want to raise is, in the Christmas time frame, the holiday gift giving, you got to trade off short-term and long-term.
Okay.
Your short-term benefit, the thrill of giving, versus the long-term benefit of being able to get into a home affordably.
Okay.
So you let the long-term goal drive your short-term behavior. One of the reasons why we're having this discussion right now, we're trying to be proactive to address the behavior before you get into trouble. Because a lot of times, there have been times when I've gone to the credit card and I said, okay, I expect the amount to be X. And when it comes back, it's Y. Y is way bigger than X was supposed to be. And it's so bad, I go through and look at the charges like, no, it's got to be something wrong. I'm like, no, that's all moved. Okay.
I do that.
That's why it's important to have a plan.
I love that. Martin, would you like to add anything?
Yeah, absolutely. I love what everybody's saying. And we've all been there before. We all have people in our lives, or maybe we do it ourselves, where, hey, guess what? I went to Nordstrom and I got $200 off. Well, how much did that bag cost? Well, I got 40% off. But still, right? And then think about your wife, husband, partner. You ask them, hey, do you remember what I bought you back in 2022 for Christmas? No one's going to remember, right? They don't remember. Kids aren't going to remember. They're just happy to open up presents or be around family to, experience that time with each other. And that's what's important. So as Herman mentioned, perhaps it is just making a meal for your relatives on a special day. Maybe it's just spending time with them. Hey, we're going to go together. We're going to carve out a Saturday all together. We're going to go somewhere. That's more meaningful. That's more memorable. If you ask your kids, what are your most memorable times of your childhood? It's not going to be, oh, I got the best
Right.
gift or I got the whatever, right? It's the experiences and memories and how they made them feel, how you made them feel. So that's what we find super valuable. And also, ultimately, we're talking about home ownership today. Keep your eye on the prize. What is your goal by
Yeah.
December 2025, December 2026? I want to be a homeowner. Well, how are we
Right.
going to get there? We'll list everything Roland
Right.
said about making sure, in looking at your credit score, looking at your FICO score. You can look at that now. For example, if you're a
Yeah.
Wells Fargo customer, you look at your FICO score. So it is now.
Yeah.
If not, you don't know how to do it, contact National Foundation for Credit Counseling to obtain a copy of your credit report and your credit score to see where you are. But essentially, ultimately, keeping your eye on the prize is what you're looking for.
Yeah.
Absolutely.
And I'd love to add there. We talked earlier about marketers and how they're able to keenly target people and make you believe that this is something that you have to have. You can be
Right.
your own marketer when it comes to a home. Put the picture of that dream home that you're envisioning on your refrigerator so you're seeing it every day, and be your own marketer. And again, to Martin's point, keep that eye on the prize. I mean, put it right there, make it tangible. And then that way you'll focus on that and not so much on these other things that aren't as important.
Yes, I got my dream house on my vision board.
Yeah.
So yes, it does work. It absolutely
Yes.
works. And to your point, Martin, about kids not remembering anything, I have a funny story to share with you. My daughter, until she was about 5, her birthday is in March. I would take her Christmas presents and just put birthday paper on it, and she would just open it up, and she would never know. She would look like, I think I got this before.
Yeah. Yeah.
But she just never knew because they don't remember at all.
Yeah,
So I
that's
think
it.
that's
That's
a
it.
funny point. So let's say we go out and we bite the bullet and we buy all of these expensive gifts, right? Because we know we do fall victim, we do fall prey to the marketers. How can we recover? Like, how can we manage that debt once we've kind of just accrued it? Because that's just what we've done habitually over the years. Like, is there a way that we can kind of dig ourselves out of the quicksand, if you will? This is for anyone.
It's never too
Yeah.
late. It's never
Okay.
too late at all.
Okay.
And I would say the first step is to stop spending, come up with a plan. What is your budget? What is your plan? Okay, you messed up. You had a budget. Oh, it kind of went south, right? I
Right.
fell victim to that, right?
Right.
But what is the plan going forward? And sometimes it's the extreme is where you're just eating, just rice and beans for every night for dinner, and then
Yeah.
you're just you
Mhm.
dine out, right? And you're not going into a restaurant. And
Right.
maybe it's the little things, right? But it's never too late. But you have to have a plan in place, preferably with a professional, which Roland mentioned you can get for free with National Foundation for NFCC, National Foundation Credit Counseling. But you have to get on a plan, on a budget, and still staying focused on what you're looking to get to eventually.
And
Yeah.
I agree with that wholeheartedly. But the other thing is, be honest with yourself.
Okay.
Be honest with yourself. You know what you will do, you know what you can do, and you know what commitments you'll stand by.
Right.
Commit to yourself, commit to your future. This is important. This has ramifications. And it's easy to say, oh man, put your head in the hole and it'll go away. It's not going anywhere.
Mm-mm.
It's not going anywhere. And it is okay to ask for help. Just make sure you get help from a HUD certified nonprofit counseling
Okay.
resource. NFCC.org. You can find it with us. NFCC.org. Go there. We'll get you connected.
And the sooner the better. I mean, the sooner you face the situation that you're in and do something to address it, the better off you'll be.
Mm-hmm.
You don't want to continue spending. You've got to stop spending if you want to get out of debt. You can't continue to take on water and not drown.
Right.
As an analogy that I'd like to add. And getting out of debt, it can sometimes take a bit of sacrifice. And what we always share with consumers is this is temporary. You cut your spending out, you eat out less. This is temporary. You do this so that you can achieve your goal. And don't think that you're depriving yourself. It's just a temporary measure to help you get to where you want to be.
Yeah, and what's amazing is that looking at my credit card bill every month, it's not a lot of big, I don't have a lot of big charges. You know, I'm not
Yeah.
going out buying furniture or a car and like that. It is going out to lunch every single day, practically.
Right.
Yeah.
Yes.
That adds
Yeah.
up.
Coffee every single day.
Yeah, and what I've heard people do before, which has been very helpful for me in the past, is cut up the credit card or just put it to the side and start using a debit card.
Yeah.
And then when you look at your checking account where the money's coming out, it's coming out, that is so much more painful than you know, and then having a credit card you deal with it at the end of the month. I'll deal with it later, right?
Yeah.
So debit cards can be so helpful too.
Yeah.
Credit card.
I got a shameless plug. Shameless. And Hermana Bear, it's not because you're on the phone, right? Not because you're here with us. But the importance of credit counseling is so important for the financial success of you getting into homeownership. I wish 10 or 15 years ago, when I saved up some money, and I give you a little scenario that I went through. This is a painful memory for me. I may have spent about $4,000 or $5,000 during Christmas, and I had the money saved up. I was like, "Oh, I'm going to get my girlfriend something amazing. I'm going to get my mother something amazing." I know she always wanted tickets to her favorite artist. My mother's a Shaka Khan fan, so she loves Shaka Khan. So ironically, Shaka Khan was coming to a nearby city. I was like, I got to get my mother tickets, right? So I was like, I'm going all out. The concert got canceled. The item I brought for my then girlfriend, who was my now wife, it didn't fit her. So she was like, I didn't really like it anyway, right? So I ended up spending thousands of dollars. Now, I was also renting in an apartment. And I actually dipped into my savings. And there was a home that I could have used that money for a down payment and got to my first house 5 years sooner. Now, that could have been an investment property for me now, where I'm creating generational wealth for my daughter, who's now 9. Right. So I think about that and said, man, maybe if I would have had access to a HUD certified credit counseling to talk me through the budgeting and what should I do? Because one of the hardest things to do is get access to capital when you're looking to get into homeownership, because saving is really, really hard, especially with the amount of money we have to pay every day for groceries, for gas, you name it. And so shameless plug for the NFCC. You all do great work, but it's always that what if I were to have access then to get that help that I need to get my budget in order. For someone to tell me no, don't buy your mother tickets when you know it's going to be a thunderstorm that weekend, right? To help me manage my income, so that way I can get into home ownership. So, shameless plug for NFCC. We appreciate the work that you do, but it's also so important for you to continue to help our consumers as they go through the journey of home ownership.
Absolutely.
Thank you. And I want to do a public service announcement for anyone listening. Notice how Rulon, when he told the story, he bought something for his mama. Nothing wrong with that. Notice that when he told the story, he bought something for his girlfriend that quickly was followed, who became his wife.
Right.
So make sure if you're going to tell a story, tell it the right way. So
Exactly.
Once again, everybody, welcome to Paving the Way Forward. If you're just tuning in, I'm your host, Asia Chandler with Urban One, and we are here with some amazing gentlemen on the phone from Wells Fargo and both the National Foundation of Credit Counseling. We're here to talk to you about paving the way forward and home ownership, especially getting through the process during the holidays. And like Rulon said, the NFCC is an amazing resource to have. I think that it's also great to have if you are a homeowner, because what I've noticed is that people will jump into their first homes, they'll buy, and then they get the excitement. And so they want to get all new furniture, and they want to get all new curtains, and they want carpets and pictures, and they want to shop at really expensive stores that they never even walked in before. And everything is now open to them because the world of credit is at your oyster. So instant credit card here, instant credit card there. Now you've got 10 more credit cards that you didn't have when you closed, and you got all these bills on top of your new mortgage. So, Armand, what would you say to somebody if I walked in and was like, yep, I bought my new home, but I'm now deeply in debt?
So now, again, have a plan. Go to a budget. Get your budget tight. Understand because let's be honest, when you buy a home, your financial impact is different. When you had a problem when you were renting, if the light went out or the toilet broke or the sink wasn't working, you just call a super.
Right.
And that wasn't an expense to you.
No.
When you own a home, guess what? that expense is yours. If the water heater goes, that's on you.
Right.
If the sump pump breaks, that's on you. So you got to make sure when you buy your home, you have a separate account for miscellaneous, just the maintenance of the home before you buy anything. And I know we all get excited about how I knew this is our dream home. It may not be our forever home, but daggone it, I dreamt about this, and this is my dream home today.
Right.
So I'm getting everything the way I want it. You're gonna grow into your home. So
right.
have a plan. Pick a room. Maybe it's a room a year. Okay, I'm gonna get this room right. My living room. Everybody's gonna see that. I'm gonna get that right. Then the next year or 2 years after that, it's the dining room. Then maybe 3 years, it's the kitchen. Have a long-term plan. Remember, this is about long-term, successful, affordable home ownership.
Right. And loans are 30 years. So it's not
that's right.
It's not over with in 5 or 10 years like a car.
Exactly.
3-decade commitment.
And depending upon the type of mortgage you get, if it's a variable interest rate, that mortgage could go up. So understand the implications of the product you use to get in that home. I like fixed rate, but that's just me.
Me too.
And that's something. Go ahead, Martin.
Yeah, so I'll say I bought my home around 9 years ago, and the home was livable standards. It was great. It was fine, right? But we realized that there was some need for remodeling the bathroom. So we did that on year 2. And then bathroom number 2 was remodeled in year probably 4 or something like that. And just this past summer, we remodeled our kitchen. Was it 8 years later? So we're slowly saving up in order to get to the house we eventually wanted to have. And also, when I moved in, I had patio furniture in the living room. I had a nice TV, but patio furniture. So it's okay. So like it was a challenge essentially, perhaps to have the down payment and get ready to go when I bought the home. But I got it. We made it happen, right?
Yeah.
But then we didn't have the furniture to sit on. But with time, got there. Maybe that was 6 months in, and then kind of everything progressed. And as Herman said, room by room. Okay, focus. Maybe bedroom is more supported than the living room or whatever part you want to do. But yeah, you don't have to have your perfect dream home on day one.
Yes.
Like they show on TV.
Absolutely. And that's something that a HUD certified counselor from the NFCC can help with also.
Right.
It doesn't end with your pre-purchase and purchase your home. We also do post-purchase counseling as well. And it's designed to do just that, help the consumer to maintain that household, not overextend themselves so that they run into difficulty and are jeopardy of losing the home. You know, we don't want to just help you get in. We want to help you keep that home, and working with the counselor, you know, setting up a plan, you know, taking care of those things, buying those large purchases for the home a bit at a time is part of that whole process.
Yes.
Now,
like
I have a real story.
Goals.
I have a real story. Right after school, when I graduated and I started working, I was living in Minneapolis, and I got an apartment. Now, all my colleagues got their apartments, some were married and whatnot. You walk in, they have kitchen, they have nice living room, they have nice bedroom. You come to my place, I had a bed because I needed a bed. I had a TV, I had a stereo, so I didn't even have a stereo stand. I had milk crates.
Milk crates. Oh
yeah.
That's back in her
I had milk crates, and I had a microwave because the kitchen had a counter. And that was the extent of my apartment. One of my friends came over. One of my really close friends came over. He said, "Man," he looked around. "I don't know why people pick on you." He said, "This is the best furnished closet I have ever seen in my life."
You get donations too, Herman, maybe.
Exactly. So here's the deal. I knew what my long-term goal was. I was looking to buy a home. I was saving aggressive because I wasn't married, so my standards were really low. I had music, I had TV, I had a bed. I'm good.
And Herman, your friend who had the nice place, right? It's very possible that was all purchased on credit as well.
Exactly.
There we go.
Exactly.
Yeah.
He's still paying for it, right?
Yeah, listen.
Please
Run your own race.
Yeah.
Run your own race.
Absolutely.
That's it.
Now, Martin, you raised a good point when you spoke about using your debit card as opposed to using credit cards. Is there anything that consumers could actually do in collaboration with their banks or their credit unions to kind of help limit their exposure to kind of like overspending during the holiday season?
Well, I'd say the first step would be to pull your credit report. We can help you at the bank, and also with NFCC can help as well. Because sometimes you have credit out there you don't know, right? And or perhaps, hopefully, your credit wasn't stolen. That's another possibility. That's a whole other story. But you want to know your full financial picture as to how much you owe. What are your obligations every month? I would also look at your credit card statement. See what kind of recurring payments are on there that just
Mm-hmm.
happen to slip in there and you happen to forget. Maybe it's your iCloud monthly charge. Maybe it's a streaming service. Maybe it's some other audio or song streaming service as well. Something that slips in that you just totally forget about, but you just enjoy every month. And that could be in hundreds of dollars. If you're trying to get on a budget or stick to a budget, eliminating some of those things are totally acceptable, totally fine. And so step number one is I would conclude is that get to know your full financial picture before you move
Yeah.
forward.
Yeah, that's a good answer. And it just made me remember that like the stores not only target you with the marketing, but they target you with like having your phone numbers registered. Like, how you say, hey, are you a member of this?
Yeah.
Are you a member
That's
of
right.
that? And I could be in like Victoria's Secret and I'll give them my phone number and they say, you qualify for a $10,000 credit card. I was like,
Yeah.
I don't need $10,000 in underwear. Like, but they want to give it to you. And you fall victim because you're like, wait, I can get this. Every store you go in, you're pre-approved. You're pre-approved. What is your advice to potential home buyers when they kind of get, like I said, when they're attacked, and not only are they like waving items in front of your face, but they're waving new credit cards and new debt in front of you also.
Yeah, it's not worth it is the answer. A lot of these retail credit cards, the interest rates are ridiculous, over 22, 25%.
Right.
So, but you'll get today and today only, you get 20% off. If you do the math, it's never worth it. And end up like, oh, I'm getting 20% off. I'm going to spend more money now because I'm getting 20% off. You fall victim of that. And Herman, you mentioned about marketing, how they play on your emotions and psychology. So go in, get what you intended to purchase in that store, and get out of there.
Quickly.
That's it.
On the run. Like, okay, I'm gonna give you permission. The example you gave, Asia. If you're in Victoria's Secrets, you can take that credit card. You can buy $10,000 worth of underwear. Only if
Herman.
you are walking the runway in Paris or Italy and they're paying you $300,000 to do so. Because that way you can write off that expense as a work expense. If you're not doing that, I don't want to hear anything about you getting $10,000 worth of underwear.
I left the card in the store. Okay, Herman.
There you go.
It's so enticing. It's so enticing, especially when they throw the 0% interest for the first 12 months or 24 months. But it's compounded, to Martin's point, with 20 or 30% of an interest rate. And you're like, well, I can pay it off in the first year. I'll be fine.
Right.
And then your behavior doesn't change. So you're still spending, right? And then now, once that 12 months is up and you start to see, okay, I need to take care of this credit card that I've been sitting on, right? It's too late now, right? Those interest charges have accumulated. And then, you might have to spend more money to take care of an emergency on that same card. Now you're compounding the interest again. Now you have the payment. So it's so enticing. And that's one of the things, we want to let our audience know is during the holidays, make sure that you are aware of those situations. When you're walking into the stores, when you're shopping for your family for the holidays, just be aware. Be aware that those are not necessarily scams, but they're ways to market you into getting into more debt. So just be careful and make sure you're doing your research.
Read the fine print. Read the fine print. Understand what the consequences, like Rulon just mentioned. All right, after that 12 months, what's the interest rate if you have an outstanding balance? Boom. That has long-term implications for your financial profile.
That's right.
There you have it. Once again, if you're just tuning in, you are watching Paving the Way Forward. I'm your host, Asia from Urban One, and joining me are these amazing gentlemen here from Wells Fargo and the National Foundation for Credit Counseling. So if you need more information, please go to wellsfargo.com/mortgage education. And right now we're going to hear a word from Herman about the NFCC.
Blemish credit doesn't have to mean the end of your dream of home ownership. Nonprofit HUD certified credit counseling is a safe resource that can help you manage debt and ensure a bright financial future. The National Foundation for Credit Counseling serves all 50 states and offers counseling at low or no cost. To learn more about HUD Certified Credit Counseling, visit nfcc.org or call 844-865-3028 today. This message was sponsored in part by Wells Fargo.
That brother was smooth, and the
He was
ghost.
smooth. He was
Yeah.
nice with it. And the suit was tight too.
I know that.
Crazy time. I gotta get me one of those.
Hopefully you didn't get that suit on a credit card. No, I'm just playing. Once again, if you're just joining us, this is Paving the Way Forward. You know what, Rulon, I want to talk to you a little bit. A lot of our viewers are asking questions. They're talking about, the excessive generosity during the holidays.
Mm-hmm.
And you did mention some great points. Reiterate once again about the importance of kind of staying or trying to prevent falling victim to these marketers.
Yeah, keep your eyes on the prize. If you have financial goals that you want to reach, don't let the holidays distract you, right? Keep your eyes on the prize. Yes, it's the company's job to make sure they're selling products to you. And also, as you think about the spending during the holidays, you have all year to plan and to prepare and to budget. Do not fall into the trap, right? This is a critical year. And I think this session we have today is timely because it's right before Black Friday. It's right before the month of December where, we're gonna fall victim to understanding what we want to get for family members, right? So we just have to make sure we're mindful. Planning is going to be key. Just keep in mind, as you have that bigger goal and that bigger dream, and if it is a home, that's a really big commitment. And one of the things that a lender that we're going to evaluate once you come to the table with that interest of getting into a home is, all right, I need to understand how you're going to pay this back. Some things aren't going to be a quick change. Like if you're working a 9 to 5, or if you have a small business and you're paying yourself and that income is going to be consistent, that's your income. Mm-hmm. The one common denominator that can change is your debt. So as a lender, we look at debt to income, right? How much do you have to spend out of your pay to cover your obligated debt? Now, if that's 50%, then as a mortgage company, we have to say, well, you need to lower down that debt or you need to make some more money. It's really hard to say, let's make some more money next month. That's really difficult. If that was the case, sign me up, right? Right. But debt is the one thing you can control with having an advisor, for example, someone from the NFCC, a HUD certified housing counselor, or making sure that you're managing your budget and sticking to the plans that you have for yourself, for that home that's in your plans for the future. Right. It's really easy to get caught into the trap. I think all of us on our session today have fell into the trap at one point, but we've learned from our mistakes. But leverage this information, leverage the partnership, and understand that it isn't easy. Mm-hmm. It's not easy to plan and prepare, but it is so sweet once you get that goal that you're trying to drive towards. Right. And that means that maybe, you get the house and you can't have it fully furnished in the first month. That's okay. Mm-hmm. But you took the first step, you stuck to that plan, and trust me, the behavior will change in a positive way because you followed along on that plan that you prepared yourself to go on.
Right. And milk crates come in different colors now, so you can
you can coordinate.
You can decorate any color you want, any room.
That's right.
Now, do you recommend that people buy during the holidays? Is it a good time to purchase a home, like in the November, December area time, or do you recommend that they kind of get past the holidays to look at purchasing a home? What's your advice?
Good question. Good question. I think if you've done the planning and the budgeting, it's never a bad time to buy a house, right? If you're prepared. But we know that it is very enticing during the holidays. So our behavior sometimes does not allow us to be that consistent with how we manage our budget. And so when you're looking to buy a house, everything has to be in order. Your credit, your finances. Now, if you are strong enough to do that during the holidays, right?
Yeah. Right.
I have you on my team any day, right? Because it's really hard to manage that during the holidays, right? And so it's never too late to get into homeownership, and it's never a bad time to get into homeownership. You just have to understand your behavior when it comes down to spending and your financial landscape. And another shout out to my buddies over there at the National Foundation for Credit Counseling. Have that conversation, right? Homeownership might be in your very near future, right? But it might take some small tweaks and changes to your budget. Or you can have a real conversation. You know what? It's not in your plans for the next year. Continue to budget. That doesn't mean go out and go crazy on the shopping spree.
Right.
That just means that you need a plan to follow to reach that goal. Martin said something that really hit home for me.
Mm-hmm.
What memories are you going to really make, right? What memories are you making?
Right,
You know,
right.
if I get my daughter that new video game that she's probably going to like for a month or two, and then she's probably going to forget about it, right?
Yeah.
Or we can take a trip to a nearby city and have a nice dinner and build some memories, and it costs a fraction of what that video game would cost, right? And so, but then we also we get a chance to come back to our home and celebrate here as well too. Right. So there's a bigger picture in mind, and we just got to make sure we keep our eyes on the prize. So it's never a bad time to buy, but as an individual, you have to understand your financial situation, and then make sure that you have a plan in place.
I like that. You know, I really wish that there was an NFCC when I bought my first home, because I actually purchased my first home when I was 22, and I was so excited to get the approval that when they told me what I was approved for, I went out looking for this super expensive house that I knew in my heart of hearts I could not afford. But I just saw the piece of paper. I was like, you know, so I see so many people that get approved for $500,000 and $600,000. But the reality, when they sit down and talk to a Barry or Herman, they say, guess what? You probably need to look around 425. You know, just to keep, when you look at your debt to income ratio, and I'm trying to speak in layman's terms because a lot of people don't probably really know what debt to income ratio is. But when you look at the overall picture, you need somebody like Barry or need someone like Herman to kind of break it down to you, because you'll get so excited in the buying process that you overshoot, right? Yep. So how can we help new buyers from falling victim to the excitement of, you know, maxing out their approval, their first time approval? I'll give it to you, Barry.
Yeah. I would say, again, it's important to develop what your ultimate goals are. I mean, do you want to be in a house and be what we call house poor, meaning you can't do anything else because your mortgage payment is taking your entire budget? Or are you a person that likes to go to concerts, that likes to go out to dinner, and you want to be able to have that home and do those things? Right. You have to understand, you know, your income is your income. And if you want to maintain your current lifestyle in the context of being in that home, then you can't overspend when it comes to purchasing that home. So it's really just understanding who you are, what you enjoy, what your budget can support, and doing or making decisions that will enable you to continue to do those things that you like to do.
And to build on that, it is critical that you also have a what if fund. What if the water heater goes? Right. What if the sump pump goes? What if the transmission goes? Yeah. You want to make sure you have money set aside to pay for those unexpected emergencies. Yeah. And that in doing that, it does not undermine your ability to pay for your mortgage. You always got to pay that mortgage. That's critical. Right. And then the other thing, one more point is home ownership is critical, but there are other critical things that we have to plan for in our lives, such as if you have children, college education, you got to plan for that. And then the other thing is retirement. You can finance a college education. You cannot finance retirement. So all these critical goals and objectives that are all long term, you got to make sure you have a plan so that you can comfortably afford all of it. And then the last thing I'll say is we got Black Friday coming. Yeah. Folks know they want to buy a house. It is not hard to tip a person and say, well, I know I'm gonna buy a house. I'm gonna get that big screen TV right there. I'm gonna get that stereo system put in my house that I don't own yet, that I haven't even seen yet, but I'm just gonna have it and save it. And then when that no, don't just wait. Put everything in the right sequence. Buy the house first, then get the big screen TV, then get the fat stereo and all the other stuff. Get the house first, because making the wrong decision or operating in the wrong sequence can affect your ability to actually get that house.
All right.
That's correct.
Martin, you look like you want to chime in.
How'd you know? Yeah, absolutely. So since we're sharing personal stories, so when I was a youngster, when I was in my mid-20s, I got a job and I got a car. I got a Lexus, right? It was these monthly payments were ridiculous. It got to at least it. And every single time when I got into that car, it got me upset remembering the monthly payment I had to make on that car so much that it was no longer enjoyable. And I could not wait to get rid of this car and for the lease to be over.
Yeah.
You don't want that to be your house.
Yes.
Right? You don't want to go home and have anxiety around your mortgage bill come in, or every time you walk in the door say, oh man, I overspent. So even though you are approved for a certain dollar amount of home, doesn't mean you have to go there. You still want to have money left over each month for furniture for you want to eat, right? Assuming you want to eat too.
Gotta eat.
So, and you want to be able to go out still. You still want to travel. So you need to leave some space for all those other things you want to have in your life.
Yeah.
Absolutely. Let's take this moment to hear a word from Rulon from Wells Fargo.
For many, the American dream of homeownership feels a bit out of reach. Owning a home isn't just about a roof, it's about building wealth and security for future generations. That's why Wells Fargo is a leading lender for people of color, and we're going further. The benefits of homeownership go beyond bricks and mortar. It's about stability, community, and opening doors for our brighter future. Unlock your dream. Visit wellsfargo.com today.
This message is a collaboration between Wells Fargo and the National Foundation for Credit Counseling.
Again, get more information at wellsfargo.com/mortgage education. I'm so excited that we're even having this conversation today. We have a lot of excited people chiming in. This question goes out to Martin. If someone in the audience is hearing this particular point about purchasing a huge item too late after they've made a purchase, is that the kiss of death for them, or can they still purchase a home?
You know what? I would say you could always return it. Well, may always. You can sometimes return it. There are some places where you can return items you purchased years later. We all know where those places are, right? So
right.
Nothing's wrong with that, right? And then also owning, I think another important piece is owning up to what you've done, as I think Herman, Barry, and Roland said as well. Yeah. And say you purchase some, let's say a sofa, right? A super expensive, fancy sofa. Or a TV, you could always sell it. Yeah, you're going to lose money on the deal in the end, but think of how much that would free up for you to pay your bills you're behind on, or at least get that out of the way. So I would say first step is to always own up to what you've done. There are solutions to things. Yeah, you're probably going to lose some money along the way. You learned a lesson along the way, but still, it's never too late.
This next question is for Barry. It says, what can be done in a situation where the person in debt who has hopes of buying a home also wants to provide a wonderful holiday gift for a giving season? They're saying, how can you balance that when you're trying to purchase your home?
Sure. Again, I would say the priority should be focused on paying down the debt. And it may take some sacrifice. The best approach, but it's the best approach to support the goal of home ownership. Right. And it's okay to be honest with friends and family about gift giving. Explain your goal that you're trying to purchase a house, and if you overspend, it would impact your ability to provide those gifts or have a lavish holiday or a holiday dinner or give gifts. So you have to put the priority into paying down those debts. I mean, it's important. You have to.
You have to. And I didn't even think about the dinners. We were just talking about gifts.
Yeah, absolutely. That's part of it too. You should create an entire holiday budget that includes all aspects of the holiday, not just gift giving. Too. Travel in some instances as well. It's part of the equation.
Gone up.
So now dating, what is your dating budget? Listen, there was a song. Same thing it took to get your baby hooked, it's going to take the same thing to keep.
Yeah.
So you need to figure out your dating pattern and budget, your life pattern. Like, she wants an $18,000 ring.
Ooh.
There was a judge show where a man sold his blood to pay for the engagement ring. The lady found out he sold his blood, and she was appalled. Oh, I can't accept it. I'm like, okay, cool. She's not for you, son. She is not for you. Move on. There are billions of people in this world. Find somebody whose economics match your own.
Wow.
Oh.
That's deep.
Always come on with interesting situations. Yeah. You know, Asia, I would say a lot of people, if you were to go up to your family members and say, "Oh, you know, this year we're going to do a pick a name out of the hat, and only one gift."
Yeah.
I bet you start talking to your family members about that. A lot of people want to do the same thing. It's just maybe they're not courageous enough to bring that topic up. Like, oh, people think you're poor or you're struggling or whatever. But you know, when you're going through, it's probably a lot of family members are going through as well.
Yeah,
absolutely.
That's a really
good idea.
Yeah.
Great ideas today. Armand, we're going to give you this last question. They said if they call the credit counseling service or if they contact HUD, what could they expect? You know, what if your credit is incredibly low? Is there any hope at all for home ownership?
Expect to be uplifted, because this is a bridge from where you are to where you want to be. Okay. And as long as it's HUD certified, nonprofit, not going to cost you a whole lot of money. The only typical expenses, and Barry, you can correct me, is if they have to do a credit pull. But after that, typically it's free. And we're going to provide you with the insights step by step of how you can get from where you are to where you want to be in a non-judgmental environment, supportive. You've just been introduced to your financial coach. Be excited, be empowered.
You know, that does raise a good point, because a lot of people who may have like recently gone through divorce or filed bankruptcy or just never paid anybody because they didn't know any better. You know, a lot of people, it's about being taught. You know, thank goodness my father made me understand credit at like 16, but I know a lot of people who have no idea what credit is or how to use it properly. So if you got a 410 credit score, they might be a little embarrassed to walk through the door or even call you and say, I have this credit score, or they're afraid that you're going to pull it and see that it's 410.
Don't be. Don't. Yeah. Put it this way: you're not the first. You won't be the last. It is why we exist.
Right.
This is why we're here, to help you. So don't feel judged. Be excited. I mean that sincerely. Be excited. We are a bridge from where you are to where you want to be.
Yeah, and you know, from a mortgage lender's perspective, that's what we want. We want a consumer to be ready and prepared, because, you know, you might have the income, right? But if your credit's low, it's really hard to get into a mortgage. But, you know, HUD certified housing counseling is just, it's an amazing tool, an amazing vehicle to get you mortgage ready, right? And help you get into a scenario where you can find the best solution for your home ownership needs. And so it's really important. And that's why banks like Wells Fargo, we partner with the NFCC to really help create that synergy for a consumer, to get them in the space where they're ready to have that conversation. Because it's really hard for a consumer to come into a bank and have that conversation when they know they have a 450 credit score, right? There's some insecurity there when they're going down that road. It's like, should I even go? Because I know I'm not going to get it, right? A fail-safe is having that conversation with a housing counselor to actually go through in a safe space. And I say this all the time. A housing counselor has to be the financial coach, the credit coach, the marriage counselor, you name it, right? They have the ability to talk through your financial situation and really help you get to a situation where now you're prepared to have that conversation with the bank to say, you know what, I'm ready. My credit's in a good space. My income's in a good space. What products do you have? And now you're operating confidently, which is a value to a bank, because we know, hey, we have somebody that's mortgage ready and the product fits them perfectly. And so now there's a financial solution that can take place. So it is a win-win for all parties involved.
A win-win. I love that. We have one more question that came in, and either Bear or Haman can answer this. They said, overall, if we contacted you today, how long does the process normally or typically last? I guess they're asking.
The process for intake, I'm assuming. Barry, I'm going to let you take that.
Yeah. So a typical initial counseling session is anywhere between 30 and 45 minutes. But our counselors are flexible. I mean, if if an individual wants to get started and they just provide their, basic information, they can always set up an appointment for a time and a place when they have more time to actually go through the full counseling session. Now, as far as the process towards helping them to improve their financial situation, to be able to confidently apply for a mortgage, it really depends on where the individual is at that point in time that they begin in the process, because everyone's situation is different. It may take certain individuals longer and other individuals are not as long. But the important thing is that our counselors meet individuals where they are. And so no matter what the situation is and where you find yourself at a point in time, we're there with you along the way to help you towards that goal of home ownership.
I love it. Thank you again so much for joining us today. Again, we're here Paving the Way Forward. It's presented by Wells Fargo and the National Foundation of Credit Counseling. I'm so pleased and honored to have you handsome gentlemen join me today. I want to thank you, Barry Coleman, Vice President of Program Management and Education. Thank you for joining us. Ramon Palmer, the Senior Vice President of Outreach and Inclusion for the NFCC. Thank you again. Martin Sanchez, the Executive Director of Wells Fargo. And of course, Rulon Washington, the Executive Director of Wells Fargo. Thank y'all so much for joining us. Listen, one by one, I need y'all to let everybody know how they could either follow you on social media or how they could reach out to you if they have any other questions, because I see the questions popping up on the screen, but we're running out of time. Barry, I'll start with you first.
Yep, the quickest way to get in touch with us is to go to nfcc.org, and that way they'd be able to connect themselves with a counselor either by phone or online.
I'm just going to say what Barry said.
For us at Wells Fargo, please visit wellsfargo.com/mortgage education to get information around a mortgage. There's also some information at the bottom of that screen. Once you visit that page, kind of gives you instructions on how to engage with a loan officer if you have additional questions around mortgage. But we encourage you to reach out to the NFCC. They are a great resource. And then we are interconnected through our process and operations. And as they work with you from a counseling perspective, they're able to share that information with us here at Wells Fargo.
I love that.
What Rulon said. Click down below. Link down below.
And we're getting all these great questions as we're wrapping up. People are asking about how to avoid delinquency and foreclosure and how about home maintenance and all that good stuff. So we are going to have another one.
Sounds good.
We're going to have to circle back
like a plan.
and do a part 2 or part 3. Or how many times have we done this?
We did a lot, but we're going to have some coming up. We're going to have another one coming up later on this month, and we're going to have one coming up in December. I think it's December 11th. But these are specifically the next session is going to be about how you can prepare for the transfer of home ownership in your estate plan. That's going to be key.
I love it. Well, until we meet again, I want you all to stay blessed. You can follow me at Always Ask Asia on Facebook, Instagram, Twitter, and TikTok. Again, that's Always Ask Asia. I thank you so much, Barry. Thank you so much, Herman. I thank you, Martin. And I thank you, Rulon. Until we meet again, I want y'all to stay blessed and keep paving the way forward. For more information, please visit wellsfargo.com/mortgage education. Again, that's wellsfargo.com/mortgage education. And we'll talk to you soon. We'll see you next time.